What's up, everyone, and welcome to the Daily Macro Update for Monday, December 29th. Only a couple more days left in the year of 2026. And we're entering the end of this year with another low volume trading week. But that doesn't mean that it's without any type of news or new macro data. So we're going to be going ahead and getting into the macro data for today, as well as go through a little bit of what to expect this week. I hope everyone had a fantastic Christmas as well as a nice weekend here. A little bit of a interesting week with the New Year holiday being on Thursday of this week. Typically, a lot of Wall Street is on vacation. So, this is again going to be probably another low volume week, but that doesn't mean that this isn't a time to just not participate in the markets because there's still going to be different opportunities. This is also a time for those people who might have some losses as well as gains in their portfolios. You can reach out to your tax professional, but make sure you guys are asking them about any type of tax loss harvesting opportunities within your portfolio. And so essentially the way that that works is any type of losses that you occur, you would sell some of those, realize the losses, and then you would just, buy back those shares after the new year. But don't just take my word for it. Definitely seek a tax professional before you do anything tax related. Definitely not tax advice. But yeah, I know that also too. Some of the streams in the past have been a little bit, lagging as well as some connectivity issues. Well, we did some upgrades, and so hopefully that doesn't happen ever again. Hopefully, you guys hear me. It's a lot more smooth. There's no interruptions. But yeah, so we went ahead and fixed that. But without further ado, oh, also by the way, um on the 31st as well as on New Year's Day, obviously there's not going to be any streams on New Year's Day, but on New Year's Eve, also not doing a stream there. So today and tomorrow will be the last two streams of 2026. Maybe tomorrow we'll do more of like a year-end review of 2025 and then maybe some predictions for 2026. Even though this is not a predictions channel, you guys know my thoughts on just making predictions, but everybody loves them. So maybe we can just give the best take on probabilities that we can. But anyways, let's go ahead and get into uh, the markets here today. Remy, stop. We got some boxes over here, and my cat's trying to get into them. Hey, might have to grab them. But he's always getting into stuff. That's the one that's had 4 stomach surgeries over the past 2 years that he's been alive. Anyways, sorry about that. We're about 4 minutes, 5 minutes in, and I have been just blabbing. So let's get into it here. Today we received the Texas manufacturing PMI from the Texas Fed. This actually wasn't a PMI; it was just the Texas Fed Manufacturing Index, and this went ahead and went down a little bit. And this isn't really like a huge major indicator, but it's still similar to what we saw back in November of this year. So you know, there's certain parts of the manufacturing sector that have been expanding. I think overall it is in a less bad situation, and so the rate of change of growth is improving. We're seeing that as well being confirmed in things like the yield curve with the bear steepening that's going on. And what's interesting is that the type of bear steepening that's happening right now is something that is a little bit ominous. And this kind of goes into a little bit of a preview of the thoughts that I have heading into next year, which is that we are entering into full blown fiscal dominance right now. Which, for those that don't know, this is when the banks just cave to whatever the demands are of the government. In this case, the United States government is still borrowing at the short end of the curve, meaning that all the debt that they are going into in order to fund the deficit for their spending, they're borrowing those on a short term basis, right? So you can think of it like this. Let's say that you have a credit card that has a specific limit that you have to pay off at the end of the month, right? And that's kind of normal, right? You want to make sure that you're paying off your credit card balances every single month. But let's just say that you keep on maxing it out, and instead of paying it off, what you do is you open up a new credit card with a higher limit, and then you pay off the previous credit card, right? So you're just rolling over the debt. That's essentially what the government is doing every single month with their own debt by, incurring and funding the deficit with these short-term treasury bills. And you can do that for a while, but what happens if you keep on rolling over your credit card and the you keep maxing it out, and all of a sudden, maybe a year later, your total, and obviously the bank doesn't let us do this, but let's say, you have a $100,000 credit and you just maxed it out, and the bank says, uh, you know, we don't think you're going to pay this back. In fact, we're not going to let you roll out another card until you pay back the 100 grand on all the credit that you've already been rolling over. Well, dang, I don't have 100 grand to pay off this card. I guess I have to default. And in that case, that's something that's incredibly bad. Luckily, unlike us, the federal government has the Federal Reserve in order to just continue to print money. And so they can't ever default on their debt because they have the privilege of the reserve currency, which is the US dollar. And so um, the government can essentially do this forever, but the problem is that this fiscal dominance, if you look at previous, history, right, this kind of is what happened with the Roman Empire, and you can take a look at other ancient civilizations that used fiat currency and end up blowing it up. This fiscal dominance part isn't anything new to human history. Okay, this typically happens at the or closer or at the beginning of the end of the larger, 1,000-year cycle or whatever. But yeah, this fiscal dominance does not end well. And you might have a little short-term pump in some of the valuations only because inflation tends to go higher. But the growth bear steepening signals that we're getting is a little bit of an illusion because it's all being funded by deficit spending. It's not being done by natural productivity growth. And we've done other videos where the government is and the banks are essentially betting on AI to bail them out with just an insane productivity miracle um, in efficiency. But you know that's a huge bet to make at this point. And so in any case, we'll continue to just play the hand that we're dealt, right? Because you and I can't make any type of decisions on policy. That's what we vote for these politicians to represent us, which they don't. That's why I'm using air quotes. But the only thing that you and I can do really is just play this game. We have a surfboard and we can just surf the waves. We can't change what the waves or the water is doing. And so, that's what really this channel is about and what macro optics is all about is to help us navigate these insane politicians and to just preserve our purchasing power the best that we can. And when things when crap hits the fan, then at that point, this stuff won't even matter at that point anyway, right? Hopefully you have some, firearms. Hopefully you have some gold and some precious metals ready to go. But at that point, the markets won't really matter. Until then, though, we're going to continue playing the game and combat the the central banking system so that we are not part of the victims that it uses in order to perpetuate its financial surfism. I don't know, because we're all technically financial serfs or slaves. Hopefully, YouTube doesn't ban me for saying the word slave, but that's really what it's all about. They pin us on social issues when really we're all just slaves to the whole thing. Anyway, we won't go down that rabbit hole. But yeah, the growth illusion right now is just based off of this insane fiscal deficits that are going on um, due to this fiscal dominance that's going on right now, which really we haven't seen in quite some time. They kind of tried to do this back in the 70s, but it really didn't work. And the only way to do it or the only way to get out of that was a lot of pain with raising interest rates to like what, 15% or something. So, so yeah, I don't know if the market is going to handle that. I don't know if, the way that we're at right now with the market, most of the trading volume is passive investing. I don't know if we're at a point right now where the market could even handle like a 20% correction. I think they tried doing this back in April or March when we had the tariff tantrum. Sorry, just making sure the cat isn't eating a piece of plastic there. I think they tried to like test us out in March by the tariff tantrum that happened, and the market essentially puked and freaked out. And they were like, "Okay, all right, we can't crash the markets. That's not an option. Okay, we tried. Look, we tried to rip the band-aid off a little bit. There was too much whining and complaining. Can't do that. So I guess we have to. I guess we got to just print more money." And that's always the case. That's the history of government forever, right? They can't actually pay off debts, or they can't actually cause any type of pain in the financial markets because that's how they get paid too. But yeah, we'll see what happens here. What would really be interesting is if you don't get that productivity boom, and the whole bet that the government and the banks are betting on right now with the AI productivity boom doesn't happen, and that would be a sticky situation. So you know, 2026 is going to be a little bit of a coin flip, which, tomorrow's stream, we'll get into that a little bit more. But let's go ahead and take a look at the target rate probabilities for the January Fed meeting. Still in the upper, or, it's actually in the lower 80s, but 84%. I think this is the highest that it's been. So they're pretty much, the market is pretty much saying that they're going to pause at the end of January. And then let's see. And then they're not going to cut until the April meeting, and then they'll cut again in July. Of course, this may change based off of the market conditions. And then after July 2026, the market isn't having another rate cut for another essentially a year and a half. They're basically going to bring it down to 3.25 to 3.5%, and then just not cut any more rates. So for those people who are hoping for like a massive rate cut to happen, they're only going to go down like another 50 basis points and then pause, basically until something breaks, you know? Um, and really that's where the Fed is now guiding to what their neutral rate is. And I think still as inflation comes down, you'll end up getting negative real rates from this. And that's really what the government cares about is the real rate, which is interest rates adjusted for inflation. So I think that's really what's going to happen here. But yeah, interesting to see that there. Let's go ahead and take a look at the actual markets here. So at the timing of this recording, the market's just closed actually. So let's go over to the SPY here. A little bit of an acceleration in volume, but last week on Friday, we were saying to sell a little bit at the top end of the trading range, and we were signaling to our group to sell on some other things too. But taking a look at the real thing that had, or the real aspects of the market that had a correction today, were the things that have been up for the past 2 weeks. So things like palladium, platinum, silver, gold miners, silver miners, copper, right? All of these metals had a decent correction. Not all of them down to the low of the trading range. I was buying a little bit of gold, but wanting to see what happens with platinum, as well as palladium, both of which went right down to the low of the trading range. Essentially, see that there. If you were selling someone Friday, you had the opportunity to take all those profits and put them right back in, and that's why our trading ranges come in so handy, is because it gives you that signal on when to sell some and when to buy some back, because that's what happened today. If you were chasing and buying on Friday and then panicking today, then that should be a light bulb moment for yourself, that you need to actually figure out a different process for yourself. Okay. Because today was supposed to be a great day to like buy some more. Okay. After selling some over the past, pretty much 6-8 trading days, you had opportunities to sell some into this thing. So yeah, if you were not happy about today, then you should probably you should start learning macro, essentially. Incorporate that into your process. And there's a lot of people that are doing great things out there. If you want to take a look at what we are doing, um, the 31st, so in 2 days, and I know I've been sending emails, so I'm sure some people have been like, stop emailing me, but we only have a couple more days left where you can join our 6 week macro mastery challenge. After the 31st, it goes back to or it ends, right? So this is really the last couple days here of the promo. And so, yeah, for those that don't know, we have two tiers. We have a membership tier that's $15 a month. You get access to some of the training videos as well as a once a week newsletter, as well as all the resources that we use in our community. And then for our other community, it's kind of like an upgraded version. It's called the Partnership Circle. That pricing is fixed with what we have there, which you can find out by booking a call with me. And yeah, so in order to do that, just go to the link in the description below. For those who are on TikTok or Instagram, just go to my bio link, and we have a 6 week challenge where it's like a boot camp. It's free if you complete it. So yeah, go ahead and check that out. And yeah, a couple days left on that. So but yeah, today was a great day to buy some there. Bitcoin still having a little bit of a struggle session here. Remains in bearish trend. So nothing really to do there. If you guys saw last week, we were talking about Walmart. That was at the low of the trading range and is now having a bounce. So Walmart, really good bullish trend right now. Would it be a surprise if that continues higher from here? Right now, it's being priced at $112.56 per share. But wouldn't be surprised if that continues further from here. Interesting. Last week at the end, we had Nvidia go back to bullish trend, and it's at the top end of the trading range on lower volume. So we'll see what happens from here. If we do have a nice little dip, I might pick up some Nvidia for the first time in quite some time. So we'll see what happens there. But Nvidia did go back to bullish trend. Tesla almost getting down to the low end of the trading range on lower volume. This is almost, the perfect setup, essentially. It's not the perfect setup, but when you have a correction on lower volume, maintaining its bullish trend at the low end of the trading range, that's a great buy signal. So I want to give it a little bit more time. You have to keep in mind that this week is a lower volume week. And so once volume actually comes back on January 5th, next Monday, then we'll get a more clear answer on, the direction of a lot of these things here. But yeah, so it's really just a prep for when real volume actually comes back. Yeah, I am keeping an eye on this key ratio here that my team and I like to observe. This is the ratio between the consumer discretionary ETF XLY and the consumer staples ETF XLP. And this has been having a decent rally, over the past month, but it did technically make a lower high right here compared to the all-time high on November 3rd. And so that's something to keep in mind here. I would have wanted to see it continue higher, maybe make a new high from there and then have a correction. But, we'll see what happens from here. But my team and I use this as a gauge for risk on activity. So obviously, it's had a little bit of a slowdown in momentum from where it bottomed out at the end of the tariff tantrum this year or in the middle of April. And once that reversed, the markets had a crazy rip rally there. Lastly, let's take a look at net central bank liquidity. So that has actually had a decent bounce ever since this bottomed. That's when Bitcoin also stopped going down. So we'll see if this continues higher. Then I would definitely want to be paying attention to what Bitcoin and what some of these more liquidity sensitive assets do from here. Dollar still remains in bearish trend. Bond yields, the short end of the curve, so something like the 2-year remains in bearish trend, but the higher up you go, like if you go to the 30-year, that's in bullish trend. A huge sign of, fiscal dominance, right? The Fed is just choking the short end of the curve. And then the long end of the curve is just going up because the bond vigilantes are, basically calling BS on this fiscal dominance situation that we are hurtling towards. But that's pretty much what I'm seeing in the markets here. Let's take a look at the yield curve. Yep. Look at that thing. Keeps on steepening. I know it says bull steepening, but I need to play around with these metrics a little bit more. But the 3-month performance is bear steepening, and that's really what we'd like to take a look at there. So, but that's pretty much all I'm seeing here. Let's go to macrooptics.com and go to the market dashboard, economic calendar. And let's filter this to today or this week for the United States. Let's just do most important. Yeah. Like we said, nothing too crazy. Chicago PMI tomorrow, jobless claims on Wednesday, and then you have S&P global PMIs for December on Friday. So nothing too crazy this week. Next week, I think will be a little bit more eventful. Let's take a look. Yeah, next week will definitely be, volatility coming back, ISM manufacturing PMI. We got JOLTS job openings, services PMI, ADP non-farm employment. So labor market jobs data. Next week is going to be way more involved. So enjoy the slow week this week. Let's go ahead and get into this and get into some questions, and then we'll go ahead and call it off here. But somebody mentioned Ray Dalio's The Changing World Order. Yep, I mean Ray Dalio is making a lot of his money on books these days. That's for sure. Thoughts on ALM? Let's take a look. Bullish trend. Market cap of 2.35 billion. A little bit small for my taste, but still remains in bullish trend. Would I buy it here? No. It's gone up a lot. Volume has dropped off and it's near the top end of the trading range. No, not buying it here. Definitely gonna have some more patience. But good call out though. I don't know anything about this company fundamentally though. So all I'm just doing is taking a look at what it is in terms of our process. Thoughts on weed stocks with it just being decriminalized. So it's not that it's being decriminalized, it's going from a Schedule 2 to a Schedule 3. You can still have a substance decriminalized at a Schedule 2, but I think the descheduling from a 2 to a 3 has to do with a company's ability to manufacture and distribute products from that. So it has nothing to do with like arrests or getting arrested or anything like that. It's solely for weed company profitability, which is a good sign. I mean, that's going from a Schedule 2 to a 3 is good news. So if you take a look at something like MSOS, this did have a huge rally on that news. It's since come down a little bit. Weed stocks are incredibly volatile. I mean, they are almost as volatile as cryptocurrencies. So, I mean, that's what you got to expect if you're going to invest in these. But yeah, I mean, if it continues to happen, then I wouldn't be surprised if, cannabis stocks continue higher. I mean, pretty much over the past few years, going and looking at this ETF, this thing has just been on a major bear market run. And so I would like to see a little bit more work done by, something like MSOS. But yeah, looking at this chart right here and zooming out all the way till its inception in 2020, I would just say that with it making a new higher high just recently, that is good news. So it's trading right now at $4.45. And if we continue to get good news on that front, then definitely want to be looking at some of the different companies that are doing the best in those. So, yeah, those are my thoughts. Thoughts on Oracle. Oracle's in bearish trend. So, not really anything to do with that right now. Yeah, that's all I got. Do you think cryptocurrencies will do good into next year with no rate cuts in first quarter? I don't know. I mean, it's something where normally when you have a bear steepening and you have growth rebounding, typically cryptocurrency does well. But, just like how I mentioned, how this growth is mostly being fueled by government deficit spending, it's not natural, organic productivity growth. Bitcoin might be sniffing that out and calling BS that this is an actual growth and it's actually just putting us in a worse credit situation. So, a lot of people don't realize that Bitcoin is a huge liquidity signal, right? As much as we like to buy it, trade it, and talk about it, it's also a macro signal. So, when taking a look at something like Bitcoin, you have to look at it that way, along with any other trading asset too, right? I mean, gold performs best when the market's doing certain things. And that's really how you want to model it. And that's the way that we do it with ours. And there's other people that do it for themselves as well. But but yeah, I mean the crypto signal right now is very interesting given a lot of the optimism that we're seeing from our institutions. If it goes back to bullish trend, I'll buy some, but it's not right now. Won't the new Fed incoming just keep cutting because that's what Trump wants? No. Good question, but even if Trump gets his guy in there, the only problem is that Fed policy is a vote from the FOMC board, from the voting members, right? There's 12 members or 13 members. Actually, I forget how many. Um, but they all have to vote, and it's majority. So, if you get a bunch of dissents from what the Fed chair wants, then you could run into some issues. And I think it's actually going to cause record dissents if we do get that. So a lot of people are expecting Trump's guy to get in there and just, they're just going to start hacking at rates. I think the opposite will happen. I think Trump's guy will get in there and it'll cause, chaos that you've really never seen within the Fed, you know, just getting 2 dissents from the Fed is like, "Oh my gosh, like, what the heck is going on over there?" Right? Because normally it's 100% or maybe you just get 1 dissent from what the majority vote is. Um, but you get someone like Trump's guy in there who is just 100% political, and, even though we know that the Fed is essentially a legal cartel and is nothing but evil, I think the people who try and work there have tricked themselves to thinking that they're doing something good. So their hearts still might be in the right place, but they're driving a piece of machinery that does nothing but destroy. It doesn't matter if you're trying to steer it as much as best possible to not hit as many pedestrians. It's meant to do that. So if Trump's person gets in there and it causes more dissents on record that we've ever seen, I think that'll actually increase volatility in markets because the uncertainty and the confidence is going to wither away. You have to understand that over the past 4 years or 3 years, ever since the market started to rebound at the beginning or at the end of 2022, um, what's also fueled that is a established confidence in what the Fed is doing. Because really, ever since they started, they said, "Hey, we can get inflation back down without causing a recession, right? AKA a soft landing." That was really their sales pitch to the entire market. And so far, they have technically been able to uphold their word, even if it's something that we none of us really agree with. Technically, from the market's perspective, and that's really what matters most, right? You and I can have our own personal opinions, but we can't invest on what we personally want the market to do. The market is going to do what it does. And so we have to play what the market is giving us. We can't let our bias get in the way, or else we're going to lose money. So, yeah, it'll be interesting to see what happens once Trump gets his guy in there. So, silver, yeah, silver still looking good. Gold still bullish trend. The title of this video is the Euphoric Silver Top, and we haven't even talked about silver yet. So apologies about that. I mean, we did briefly, but yeah, I mean, silver still in a complete bullish trend. It was pretty wild to see that huge jump, post market on Friday, but still remains in bullish trend. Had a little bit of a buying opportunity early there in the day. We'll see what happens from here. I wasn't going super aggressive because, looking at the trading ranges, I would like to see it get down to like $60 or in between 60 and $61 per share on SLV. Who knows if we'll get that, but that's really kind of what I'm looking at there. But yeah, silver, gold, all these precious metals still remain in a clear bull trend. Even something like palladium that had the biggest drop, along with platinum today. Roku, it's not on my radar. Yeah, Roku looks a little wild, but it is technically in a bullish trend. It's not something I'd put on my list, though. Sorry if you guys had asked more questions earlier. Just catching up to the most recent ones. If I haven't answered your question, just go ahead and ask it again. LOZ. Yeah, sorry about that. Quadruple U, what is that? Energy Fuels. Interesting. I don't know what this company is, so Energy Fuels Inc. is a mining development company which engages in the exploration and evaluation of uranium and vanadium properties. What the heck is vanadium? It's interesting. Unobtainium. X-Men. Yeah, I mean, just looking at this, it's in bearish trend though. So, um, what's the market cap on this thing? 3.58 billion. A little small for my taste, but it did look like I had a huge run from April of this year till just recently. Let's see what this was. 700% from April to October this year. Wow. Okay. Very interesting. That's a heck of a 6-month run. Yeah, I mean, definitely would like to dig into the fundamentals on this. Again, I don't know anything about the company. But if it's a miner, a uranium miner, it looks like, then yeah. Another if you just wanted to look at an exposure that's less volatile for an ETF is the ETF URA, right? So it kind of looks similar to the chart that you just showed me, but yeah, this is a little bit more stable, right? If we take a look at the gains that we saw during that same time period, 195%, which is still freaking amazing, but it's just a little bit less volatile if you want to have exposure to something like uranium. I do think uranium is going to be something that's more needed. I think the current way that we are trying to fuel all this this data mining and all this stuff, very water intensive. I think something that's more clean like uranium is well, I guess you still have to use water if you're using uranium as a fuel source to create heat, and then you want to multiply that by using steam by introducing water. So uranium to burn or to make steam. But yeah, I think uranium is still going to do well, but I'm just not buying it right now. IREN, bearish trend. Bitcoin miners not having a good time. They have a lot of AI exposure. So yeah. Copper is in a bullish trend. That's another one, as well as copper miners. COPX is the ticker for copper miners that we like. CPER is the ticker for the copper index if you want to have exposure to spot copper. But copper's been on a run. So I don't know what you mean by could copper run next. It's already been on a run. Is palladium an attractive buy for you on this pullback? I want to see a little bit more. So you could have added some a little bit, especially if you were selling some on Friday. But yeah, I mean, I'd like to see it pull back a little bit more. Excuse me. Ugh. Thoughts on Shopify? Thoughts on oil and natural gas? Oil's bearish trend. Natural gas also bearish trend. So yeah. Shopify, it looks like it's in a bullish trend, but in the middle of the trading range, volume has dropped off. So wouldn't be buying it here, but yeah, it could definitely be on the list. Yep. All those metals looked good. Do you think the AI bubble is sustainable or is a lot of air in circular finance? It's definitely a bubble, but I mean, who knows when it's going to pop? It's not really a good strategy to try and predict when that's going to happen. Just ride it until it does. Explain what you mean by learn macro. I mean, learning the way to use the rate of change of GDP, inflation, all this other data, as well as contrast that with what the macro is saying in the price charts, and using that as direction on what best things to own given the macro environment. I don't mean like go out and reopen your notes from macro 101 in college or AP macro in high school. That was like the academic version of macro. What I'm talking about is in the context of strategic positioning with your portfolio. So yeah, what they taught you in school is not going to help you. UEC, I don't know what that is. Yeah, uranium stock. We already covered uranium. ERO. Yeah, another copper miner. We already talked about copper miners. Both are bullish. Comfort level in money markets at this time? I mean, it depends on what your overnight yield is or whatever it's called, the weekly yield, you know? So, I mean, if you're going to hold some cash, it's definitely better to hold it in a money market fund, in my view. You should always have some cash. You're never 100% all in the markets with your portfolio. So, you know, I usually like to have a little bit of solid cash, whatever is extra, just put into a money market fund. What are your top picks for 2026? I don't know. I'm gonna have to think about that a little bit more, and maybe we'll cover it on tomorrow's stream. All right, it is almost 4:30. We're gonna go ahead and call it there. I went over a little bit more. 4% is good, by the way, on the money market fund. But I appreciate everyone for joining. Like I mentioned before, tomorrow will be the last daily macro update of the year. I'm going to be taking off New Year's Eve as well as New Year's Day. And then we'll be back here on Friday for the first daily macro update of January of 2026. And then that'll probably just be an outlook for heading into the first real actual week of 2026. So Appreciate everyone for joining. As always, if you guys would like some more help on learning how to use macro in the context of positioning in the markets, we have our 6-week challenge that is still open for enrollment between now and the 31st. If you want to learn more about the details of that, just go ahead and click on the link in my bio. Or for those on YouTube, just click on the link in the description below, and it'll take you to this website here. Just book a time on my calendar. I think I have some times left. Okay, I guess I only have 2 more times left. And it's tomorrow at 1:30 and 2:30. So first come, first serve on that. So, but appreciate everyone for joining. Good luck out there, and we will catch you in tomorrow's daily macro update. Bye, everyone.